Alright, well, this is definitely shaping out to be an interesting day. I think we might be getting a wicked reversal. Like 37.50 at a minimum. Possibly we go back to 37 and a quarter by the close. As crazy as that may sound. I'll explain once we get some more people in here. Yeah, TUA, you're talking about your VWAP guy. So, what's your thesis? We're too extended for VWAP? Because right now, when you got in that, there's no reason to start thinking about it. Momentum is still strongly to the upside. Strongly. This hasn't even begun to attempt to turn. So the quick scalp is going to turn into a quick loss. You know, trying to pick the bottom there. The quick scalp would be momentum beginning to wane. It's not waning yet. Beginning to wane, and then quick scalping any bounces for further pullback. So that's why I don't like VWAP. What did VWAP tell you here? Oh, we're above VWAP. Buy. Well, you got lucky, I guess, that time, right? VWAP doesn't. I don't know why people love VWAP. I'm not knocking you or anything, but a lot of people talk about VWAP. Nothing wrong with VWAP. It's just, what does it tell you? It's just one average, one moving average. That's all it is. I mean, a better what minute did you guide at? 35? When did you buy it? Right here? 34, 35, you bought it right here? I wouldn't be too concerned about it. You know, yeah, we are very extended. But looking at the 1 minute, let's say you bought it right here. Why? You didn't even get a close above the 1 minute 9 MA. Probably the exponential, possibly, I don't know. But you didn't even get, there was no even candle over candle close on a 1 minute, let alone closing above the 9. So if this closed green up here, then maybe you could got follow through under this pivot right here. This is why you need to pay attention to momentum, because even on the 1 minute, this is so deeply embedded right here. The odds are this is not going to just reverse sharply, or who knows how it's going to even reverse. The one good thing about this move is the speed. So there will be a quick bounce, a quick pullback when it does begin. Oh, see, that's stupid too. So I don't know if you've been listening. I'm not. Well, by the way, I'm not knocking you, but I don't know if you've been listening in the prior streams. But I tell for reals all the time, and I tell everyone, do not go far out of the money. 6 cents. You should never, ever be buying a 6-cent option, unless it's like a $7 stock or whatever, and you're buying the $7 calls or something like that. Never ever buy a 6 cent option. Like, obviously it depends on the circumstances, but a bare minimum like a quarter, and that's like an hour into the close, and they're cheap and they're not far. They're $1 away or something. There's no reason to do that. So the 375 calls. Let's see here. So let's see how why that's not a smart thing to do. So let's look here. So the 375 calls. So yeah, the wait, what are you talking about? 6 cents call didn't get filled for 6 cents. Oh, you got missed by 6 cents. Oh, my bad. I thought you're bidding 6 cents. I thought that's what you're talking about. So the 375 call. Okay, that's not horrible. Just because if you played it, that they're going to make an attempt from the open into the gap. That's not horrible for the 375 in that circumstance. Okay, so that's not horrible in that circumstance because you have all day and you're playing the push into the gap, so that's not horrible. But let's still look at it anyways. Why you don't need to do that, and why you can't play those, the big fat round number. Okay, everyone, you got to get away from the big fat. That's why technical analysis works, because everyone's selling at the big fat numbers, the half numbers, the everything. Okay, so let's look at them. So let's just look. Okay, so the consolidation here. Hold on, this is cutting off my screen. So, hey, I'm for real. Did you sell that put? I hope you sold that put at 372. You got lucky again there. Boy, did you get lucky again. Alright, but whatever. We're going to use this as an example. 374, okay, a little bit better, but regardless, the example. So right here, 375s. Okay, between 60 and 80. Alright, so let's just say 70 cents. Let's say you got in at 70 cents. Okay, a solid 5-bagger. Okay. Rock solid 5-bagger. You got it in the middle here. Let's say, there's your solid 5-bagger. Solid 5-bagger for 375s. Okay. And granted, these went straight up. So keeping all that in mind, and all things being equal, because if they didn't, and they consolidated, they pushed, they pulled back, they burned, right here. Let's say they broke out. Okay, so granted here they hit $2. Let's just say. So 2.5 bagger, which is great. But assume it hit here and then pulled back quickly, and then hung around for an hour. So you're still at a double, but after that hour is bleeding off, now there may be $1. You get another dip. You bought at 70, then they're back at $1. So you're still green, but the point is the theta, and if it doesn't work quickly, and how that can work against you. Okay, so now let's see the more conservative play. Okay, at the open. Well, it depends if you bought it at the open or in 15 minutes, but 374s are definitely better. So the 374s I wouldn't be knocking at all. That's definitely perfectly fine. The 372s would be the safe bet. So let's just do in the middle, the 373s, just to show here. So where did you get these at? Okay, $1.25, $1.50. Okay, let's say you got them at $1.40. Okay, you got a 3-bagger out of it. A 3-bagger. So yeah, that's an extra 200%. Okay, but the risk. Okay, this is a very unusual rip out of the hole. This is an a very uncommon thing. Okay, this is I was shocked to see this. Um, so this is very uncommon. This move like that through the gap, through the prior high day, this is very rare. So, but the point is, you know, you still got a three bagger, which is sick, very quickly. Okay, but it's a much, much, much safer trade if you didn't get this unusual, you know, 10% of the time they just blow through the gap, blow through that prior high day, and keep going, move. Okay, so this time it worked amazingly no matter what you bought. But pay attention every other time. You know, look back or in the moment as the chart's evolving, what you bought, and then if you were more conservative, what you bought. Because I don't know if you heard my talk yesterday, how I don't know if you were there, if you came late, but I showed the example of the compound interest calculator and what 10%, 20% a day return on your portfolio, where that gets you in a month and 2 months. The point is, you know, 50% returns on your trades. You're killing it if you could consistently do that. And that's my problem. How many 50% trades that turned red on me? How stupid does that sound? Up 50% on the trade and taking a loss on it. What's up, IT? How stupid does that sound, right? You don't know how many times I've done that. To me, I have to at least double the trade to quote unquote feel anything. To be like, okay, it was a good trade. And that's just the wrong approach. Because yeah, pretty much every day the market gives you a double. Okay, on dailies. That's a double is common. That's common. But the point is, you know, right here, I'm pretty sure this was a double. You know, if you caught the move almost, you know, bottom to high. Okay, but the point is, right here, it's setting up, looking like it's going to break. Here's my target. They missed it by 4 cents. Okay, but besides the point, let's say the target was 76.80. It was a little bit further than the nickel. Okay, and then you know that's not being greedy because 76.80 is well below the big fat 77 number. So when it doesn't hit it, and you're not really being greedy, and you have a target, and it doesn't hit it, and you know you're up 50%, 80%, and you hang in there on this candle, assuming there's going to be another push, and then it never happens, and it completely kills your 50, 80% move. You know, that's just stupid. That's what I'm trying to show here on why you can't get greedy with going out of the money, or you can't get greedy with a 50% gain on a trade or 30% trade, whatever it is. If the chart's not saying this is this is a very good setup, that you're very, very confident they're going to push. Because right here, if you remember yesterday, you guys were here for what I was talking about here on this candle right here. Okay, I said this is not a good look. Exiting this power zone all the no matter what the setup is never good for follow through if you're in a trade. So getting out of here, you're hoping, you're assuming there's another leg coming. So if you're in here from here, you got in before the 50 breakout right here. Let's say you got in here right at 50. There's your move. Okay, that's the move. That's the move. You won. You won this trade. You're a winner. Okay, that's the trade. The trade's over. The chart, we were very extended on the hourly, the 30-minute. So staying in, saying, okay, it's a flag, they're going to push it one more time into the close. Again, that you're hoping, you're wishing, assuming there's another leg coming. And this was a smoking gun right here. Number one, it was crossed the whole time. Number one, that's a fact. No matter how you look at it, off the high, this had a bearish cross. Every stochastic cross down is not bearish, but every bearish move down has a negative stochastic cross. Yeah, we'll get to that in a minute. But anyway, so back to here. This was my talk yesterday. How I would be staying in this trade. Okay, they're going to push it one more time. They came short of my target by a nickel. All this stuff. They're probably going to spike it, murder out, all this stuff right here. And they never did anything. Right here. Damn it. Hold on. Anyway, that was the 5 minute. So you know what the 5 minute looks like. But here's the 1 minute. They never looked back. There was no bounce. There was no spike. There was nothing. There's your murder algo. What is this? Almost 40 minutes later, that's what you get. This is not good enough to get your profit back here. You're done on that trade, depending what calls you got. So anyway, the point is, you got to be more careful, because most of the time, you're not going to get continued follow through like here, right here. So today, right here, I mean, especially blowing the gap and high day. This is like 90% of the time, this does not happen. I guarantee this is 90%. It's probably 80% of the time, they don't fill the gap with this big of a gap down that quickly. So this pullback, which is a normal, perfectly expected pullback and back test, perfectly normal, nothing wrong with this. When this happens, you're hoping and assuming they're going to fill the gap, and in short order, to stay in this trade. This quick pop up here, that's the trade. You won. If you bought anywhere here, bam, you got paid. You're a winner. The trade's over. Depending, okay, if you're going Friday calls or, a month out, okay, well then yeah, you can stay. You got better chances of not losing on the trade and, looking for more. But if you're looking at dailies, you got to take at least half off the table right there, get paid, and then see what happens from here. But when it comes back here, those dailies right now, you gave probably 80% of your profit back on this pullback here. So this hung out or whatever, you gave all your profits back, unless you bought the open or these dips. When it comes back here, you gave back a lot, even though it was in a very short order. I'll be back. Give me about 10 minutes. I'll be back. Alright, I'm back. Oh my god, that's funny. Huge dump incoming. Let the dump begin. I just took a big dump. Yeah, speaking of big dump, not yet. Like I said earlier, um, I think we could come back all the way down here. Today could be a crazy day. We could see 372. We might even break low a day today. I'm not getting in, assuming and hoping that's going to happen, but I was loving this gap up. I'm sorry, gap down. I was shocked. I mean, everyone was. I was shocked that this happened. Um, but I was liking this move into the gap, so I can get in some in some puts. You know, maybe some pushing up here, get some 373s or something like that. So this may end up turning out to be a gift. I mean, right now there's no reason to get in. This is an interesting setup here. Look at these MAs. This is interesting. Oh yeah, back to what I was saying. So yesterday, it's not the first time I did it. Um, did the stream just pause there? Because it just said no data for a second. Now it's saying the bit rate is good, but it said no data for a second. I don't know if it paused or lagged or something. But anyway, um, I don't know why it has to keep saying the stream bit rate is higher than the recommended bit rate. Well, I mean a higher bit rate's better, so whatever. I don't know how you change the bit rate. I guess you do that in OBS, but whatever. Everything's fine. So yeah, your preemptive short worked out there. I don't know if you're still in it, but it worked out because you got in. You got in like here, so you got paid. It worked out. So in hindsight, that was not a bad entry at all because you just missed the top right here, and it didn't wait too long to come back more. But the point is, on that 5 minute, there is no reason to get in. So after this happened here, here they're riding the 9 the whole time. There's no closes. Right here, we closed below. Here's this little bear flag. Now this isn't saying I would have did this perfectly like this. It's just showing you why to be patient as this is happening. Everyone is fighting this. Everyone's, okay, they passed the gap. Now they're going to come back here. Everyone's fighting it. That's what everyone's doing. But this whole time here, obviously here, this pullback, this is a different situation because this was a back test. So they threw it back pretty quickly. But the point is to be patient and wait for the setup. That's the whole point of what I'm trying to say here. So this whole time, you're getting FOMO, itchy fingers to short because we're quote unquote overbought, extended, all that stuff. When the market actually gave you a great entry right here on this 1 minute, closing below the 9 for the first time this whole time on this move. This little bear flag here, wedged right here. At a minimum, this is a great risk to reward against high a day as an entry, and you got paid relatively quickly. But also, what I want to say is, yes, it's not the first time I ever did it, but yesterday's probably one of probably 10 times in my life, maybe less, that I went an entire day actively watching, actively wanting to trade and not putting on one trade. I didn't put one trade on yesterday, and I felt proud of that. I was happy I did that because it's it's a win in my book. For everyone that was here, you heard me all day. What I was looking for, this is unfortunate right here. What's unfortunate is this right here. This sucks because I was talking about here or here, one more push. I was going to get the 76 puts, and they worked out amazingly. I would have had, if they did that push, because they missed the target by 4 cents. So I thought they could have went a little further, maybe 75 up here. If that would have happened, I would have gotten the put for sure. No, if only just one or two. I had my bid at 30 cents. The low here was 47 cents, I think. So that extra push probably would have got me at 30 or 35 cents. So if I got filled there, these hit about $1.40. So I would have had possibly a 5-bagger, for sure a 4-bagger, So that is unfortunate, but I was patient. The market didn't do what I wanted it to do. It didn't come to my price, and I didn't take the trade. And this is relatively choppy too. Granted, it never looked back. This is choppy. You had murder algo here, the spike here. For a split second, I was just a little tempted. I thought they were gonna pop it a little bit more, and I didn't because the 9 never crossed. So it's very unlikely they would, at least 80% of the time, this is not going to hold. Flag out, let it catch up. It's we're in these moving averages, and 5 minute wasn't you didn't have any momentum crossed up, so I did the right thing. The main thing that didn't suck me into this trade was this 9 right here. That was the smoking gun, not to get in the trade. Wait for this to cross, and then you can get in on a dip later, into the close for maybe a push to high day. I actually was tempted here for 75 cents on the 76s, or 75s for 75 cents. But then again, you'd have to be quick right here on that spike. You would have got excited. I probably wouldn't have sold because I wouldn't have my order in there. 50 cents for my entry, 50% for my entry. I probably wouldn't have because I'd be looking for a pop or squeeze to high day. So anyway, yeah, back to I didn't put a trade on all day, and it felt good. It also it's less stressful, looking for those A+ setups, so you don't have to sweat any little how do I put it? Like here, okay, I'm not saying I would have taken this either way, but right here, this, like I said, assuming there's going to be continuation on this 5 minute, assuming, okay, with this cross here, assuming, getting in or staying in, assuming there's going to be another push, okay, you're sweating this. Number one, it didn't work out. So this whole time in there, let's say you're in here, okay, they're going to jam it into the close, murder out, go, oh yeah, here we go. And then, bam, hold on. And then that happens. And then this happens. Okay. So sweating this whole thing. Why do this? For what? This is stupid. Why? So that compound interest calculator experiment or exercise I did yesterday, was what I'm going to try to stick to. I'm going to try to take much less trades. And 10 doubles makes you a millionaire, by the way, with $1,000. You're 10 doubles away from $1 million. So that's another thing to think about. And that's something I've thought about for a long time. The double exercise, the 10% a day exercise. I did that, and I don't do it. I don't do it. You get those itchy fingers, and you want to get into this and this and this and this, and then yeah, maybe it works. But the point is, there's so many trading opportunities that, so what if you miss it? If it didn't get you into the trade, there's a reason it didn't get you into the trade, because it didn't meet your criteria. So you can't say, oh yeah, I missed it, because then if you say that, that means you're taking every trade, hoping that it works out. Because every move higher starts with a bounce, and every move down starts with a pullback. Every single one. Right here, now they were very extended, and you got the moving averages, but without analyzing it, they could have made one more push, and then gave you a divergent higher high, and then, so let's say that happened. Let's say they held it here and they jammed it up for a few more candles, giving you a bearish divergence, and then let's say when they came back off of that, they only came back here into this level here. Okay, so now, if you went short on this little flag here, and they did that, then when they come back, you might make a profit. You might, rather than waiting for that setup, getting the bearish divergence, then going short, and then catching this move down and getting paid nicely. So that's why it pays to be patient. And just because I'm saying this doesn't mean, I'm going to be Mr. Patient from now on. You have to work on that. So yeah, this is an interesting day here. This is interesting. I mean, right now we're still bullish here. There's no reason to jump in a short here. But this is interesting, because I was looking at that daily chart some more last night. Every day I'm looking at it, but mainly this chart right here. And I was thinking, the more I was looking at it, I was thinking, maybe we do get some crazy move through under 350. I'm still not confident about that happening. But when I was looking at this chart, especially the weekly, right here, before today happened, because the chart was looking a little bit better. This weekly is still in the full breakout. I mean, there's just no question about it. Like, as in, when this is all said and done, we may hit this 200 weekly, and it even maybe possibly spike it. I'm not fully convinced that's going to happen just yet. But when I was looking at the chart, I'm like, why? It sure is in the position for that to morph into a move like that. Well, yeah, this week I'm still not ruling out a 360 spike. I'm Still not ruling that out. I mean, I don't know. You want to? I guess you could possibly call this a little island top right here. You know, you had this big gap up. And then the big gap down, and now they're buying it up. Does this hold? I mean, we'll see. But another thing, here's another thing too, and it jumps off the chart. When I look at this chart, it's the first thing that jumps off the page at me. These M8s, look at these M8s, fanned out. You got this 200 starting to curl up. This beautiful fan look of the M8s. This is what you want to see. Again, this is the inverse. So if this was any stock or a high-flying NASDAQ or whatever, there's no doubt I would say this move is not over. If this was NEO 2 years ago or something, looking at it like this, I'd be like, yeah, there's no doubt. I would be very shocked they don't at least break out, at least break that prior pivot. If this was any other chart. So we'll see how this plays out here. Today's crazy. I'm watching. Today's going to be a good day. I mean, I woke up late. I didn't catch any trades yet, and that move higher from the open was amazing. Let's see, even like right here, this is, man, I'm getting a little itchy fingers here looking at it. Because you got to think too. I just explained why I think we could go much lower from here. Meaning we break 360, possibly maybe the 350 break. Right now, as it is right now, it's possible, but I'm not very confident. What I am confident about is the 360 break at a minimum, a crack, and then maybe like 354. I'm still sticking to that as far as a target. If they make a run for 360. But what better way? If we are going lower, what better way than the big gap reversal, and then off of that another big reversal. Another thing too is when you're in a bull market or a bull trend and there's pullbacks, normally those pullbacks happen quick and viciously. And the reason being is because if the bull market or the bull chart, whatever from the bullish perspective, if that's going to remain bullish, the pullbacks have to happen relatively quickly. So when they get out of that hole, it allows the longer term moving averages to stay in that bull trend posture. So what I'm saying is right here. So let's look at SPY. So just look at the MAs, okay? So see these MAs? Just like how I said on the inverse chart, the fanned out MAs, once they're fanned out like that, you got to be careful. That's very powerful to get fanned out MAs. And how I said the 200 is starting to turn up, here after the crash here. The 200 went flat and then it started to turn up. Or here, let's look at the 100. It was flat and started to turn up. Here's your fanned out look like we have on the inverse. Starting to turn up. And this is like a smoking gun that everyone's fighting the market. But I remember seeing this. I think it was right here, the 50. When I saw this, and I'm not saying I was buying every dip and I made $1 million, but when I saw this turn up on the 50, so this was back over a year ago, I knew this move had a lot of room left in it. Right here, that was a smoking gun. That turn up, because you have to think too. Just simply thinking, once this cracks up, you know, moving averages, these are weekly moving averages. You know, they don't just go up and down and up and down. Once they pick a direction, they stay in that direction. Okay? Once it's moving in a direction, these take time to turn. But a 50 making a turn, a very clear and decisive turn, you know, what are we going to crash and then this is going to just turn down? That's not how it works. Very, very, very unlikely. So when I saw this hockey stick on the 50 on the weekly, um, and I was bullish. I wasn't super aggressively because this was relentless. Where you got no pullbacks, intraday and all that. It was just ridiculous because a lot of times there was no good entries. You had to kind of just like assume, okay, we're going higher. But I knew based off of that, we're going much higher. This move is, when we were here, I'm like, okay, we're hitting 450 for sure. I didn't think this was going to happen, and I also didn't think we're crashing here. This caught everyone by surprise right here. So I thought right here they may have made a divergent. Well, this was the divergent higher high right here. It just took a little longer. So I thought maybe they would do it, but quickly, and then pull back, like a double top. But the point is, these MAs, once they're in that fanned out look, here's your fanned out look. Now, I'm also not saying, we're crashing at 300 either. I'm also not saying that. I'm just saying that right now, the chart has not proven itself that the downside is over. I mean, because you have to think, look at this big move. This is just a bounce right here. So you can't say the bottom is in after one bounce here. Looking at it just simply like that. This is a big leg down here. Now, what I think is we are going to crack that. I don't know if the chart posture is interesting too, because this isn't the best posture that's telling me, okay, this is I see the setup for the next bullish divergent lower low here. It's not really an ideal setup here. If they bounced right here, if this happened, if they bounced here up into this gap and we got a cross and they hung out a little bit and then a rug pull, this cross up and then the recross down, that could have created a bullish divergence on the MACD. But right now, this is a little bit tricky here. So I was thinking today, tomorrow, sometime this week, going into this week, I was thinking we were going to get an intraday big capitulation. Some news hits, whatever it is, whatever the news is. Some big intraday, massive, like 20-point day in SPY. And that gives us our capitulation. Because we haven't had capitulation yet. I mean, this is weak volume here. This is nothing. We haven't had true capitulation. Because right now people are taking the bottom. You got people still thinking we're crashing. You have still all that in play. Nothing's changed. So like an intraday, that's how you can get that 360 break while maintaining this look here on an intraday big capitulation. And today, I don't trust this chart today. I mean, right now this is clearly a bull flag right here. They're holding it together here. But, man, I don't trust this today, because also going into today with what I just described. Now, you can say that's a bias, and I'm not going to just go short, blindly, because I think that's going to happen. But man, I don't trust, you know. And here at a minimum, let's say we don't break 360. At a minimum, they're coming back here. They're coming back to 369 at a minimum. There's no way this is it, and they don't at least come back to 369. There's no way. I would say there's a 90% chance they're at a minimum coming back here. I'm not saying today or whatever, but this, at a minimum, this area is going to be back tested at a bare minimum. So we'll see how today plays out here. I'm loving today. This is that's another thing, being patient. So this is the kind of action I like. I told you yesterday, I hate gap ups. I hate them. All this action, just, here you go. There's the action we missed out on. So this was great. This is, even though I didn't get it, but I didn't take a trade yet, but today's already an amazing day. Awesome day. You're getting price movement. You're getting, this is the type of action you want to see. Not this garbage. This garbage. This is what you want to see. This is where the market's giving you opportunities with this type of take. Now, obviously, we moved 8 points, so that's giving you action, but there's still plenty more to come today. So now this is interesting here because we are going to break high day. I don't know right now, but we are breaking high day. I got to look at all the time frames here because coming from below zero and then just to maintain this all day, this is not sustainable to me. I have a gut feeling we're going to get a big shakeout later today. They're probably going to fill the gap. That would really suck in more people if they reverse this tape. At the same time, maybe they don't because we're coming all the way from 370. And everyone's waiting for the gap. So, that's trading for. So, what I just said, those are two scenarios that could very well play out. And you can make a case for both sides. Okay, as of right now, there's no reason to get bearish here. This is a bullish tape as of right now. Isn't Powell talking all day today? I think today and tomorrow, right? At a minimum, this is not going to hold up here. Look at that 100. So how is that going to play out? The 9's going to cross the 100. A falling 100 right here. And this is going to hold. That's very unlikely. You got a flat 50 right there. Okay, he's still talking, so there's there could be something said that could scoop the market. So at a minimum, you have to wait for this to resolve itself right here. This and this. So this is interesting because This is starting to kind of wane here. You got a flat 9 right here. This is kind of giving you a rollover look right here. Again, I'm not saying they're going to roll over now or go short, but right now this is a little sketchy here because this needs to follow through. This needs to continue. Um, just based on the posture on this 5-minute right now. Because if not, here, let's flip the chart. This is why. Because now you're going to be getting a bullish divergence on the inverse right here. Whoa, do you see that? What the hell is that? Oh, fat finger. Wow. There you go. Maybe that's a sign. Let's see, I'm just curious. Where are these 376s at? 80 cents? That's interesting. Ooh, we got some volume coming into them too. These 386s, that ain't bad here. I'm sorry, the 376s. Same ones I was looking at yesterday. Because at a minimum, they're coming back down to under 375. So that could be a minimum double right here on these 376s. Let me flip that chart. This is looking a little interesting here. It's still early here, but this is looking a little interesting. That fat finger happened just like that. Like, what the hell is that? Alright, yeah, you know what? I'm going to be looking for a short once we get that MACD cross. Man, the 376s aren't bad though. I'm very tempted here. This would be breaking my rules that I just talked about. But we got a 1 minute cross, which is nothing, but because they're the 376s, and I think there's no way they don't crack 375 later today. That's why I'm really liking these here. I think I'm gonna get them for 75 cents. And okay, let's wait for this 5-minute. I think this is gonna be a good. This 15 minutes shaky, but the 15-minute, man. Yeah, there's no reason to hop on into it because of the 15-minute. But yeah, I'm kind of liking these 376s right here, based on their price and being relatively close. Oh, you have another thing too. Here's another smoking gun. This is a 4-hour chart. Being way up here, it's possible when you come out of a bottom. So reversing this, we're coming out of the bottom, we're getting the cross, and this could make a run all the way back to the 0 line before it's done. That's very possible. At the same time, because we're way up here, it's also very possible. It kind of works both ways. It's also equally possible when you're way up here, this big move, and you're way up here, you're still well above the 0 line. So it could work both ways, meaning the move is not over, but it also works coming from the bottom. You get the cross, and it's going to make its way back to that 0 line, or at least have some kind of run with the cross. Yeah, these 376s, those are going to be the puts to get, because I don't think there's no way they don't come back under 375. Oh, man, it almost looks like on the 5-minute, these 376 puts, looking at the posture, it almost looks like it wants to crack open to the upside. Man, I'm very tempted here. Very tempted here. It's a little bear flag on the 1 minute. Alright, I'm going to put a bid in. 376 puts. Now it's running away here. Not running away, but it's slowly getting away from me here. Still no reason to run into this trade here, but like I said, because they're relatively, let's say at the money, let's just call them, you know, you're probably not going to get them that much cheaper because they are at the money. You know, if we're talking to 375s, you know, a pullback you could get it on a bounce. See, they're getting, man. I have a feeling this could crack open here. Now I would have been up like 20%. I almost pulled the trigger there. The chart still needs work here. It's unlikely to run away. But yeah, 376 puts. I had a bid in here under 90. Still not gonna run away on you. Still have time here. Plenty of time. I mean, here's the 15-minute. But like I said, I think 374 at a minimum gets hit. So yeah, now looking at this 15-minute, yeah, there's no reason. Okay, see, this is why, you know, you got to be careful having those itchy fingers. Now, what I laid out, I very well may have, when I wanted to get in, I very well that might have been the best price because they're close options. You know, they're not 2 points out of the money. They're essentially at the money. But this 15-minute is telling you chill. There's no reason at all to be running into this trade. We got 17 minutes left on this hourly here. Depending how this day closes, I might swing some puts. God damn it, see? Mr. Patient. Damn, these things are up like 30% now. Son of a bitch. Do the right thing and then it works out. See, everything I was describing there, this 5-minute of the 376 puts, it looks like it wants to open up. Damn it, the low of this 5-minute candle was where I wanted to get into. They're getting bid up here, 5,000, over 5,000 on the 376 puts. They're waking up here. Alright, there's no reason to rush. You got this 20 way down here. Let's see, the moves to the down. Damn it! Look at this shit. You know, if I would have got in, I would have been. You know, you had a little bull flag right here too. There's a lot of things that were telling me to get in, just to hit them because they're close. They're at the money. And that again, that's why, because they were very close puts. Damn, they're pretty much going to double here from where I would have got in 5 minutes ago. Son of a bitch. Son of a bitch. So they may crack that prior pivot. They probably will. So wherever that leads us, this 15-minute, it should let you in. Oh, this is a new 15-minute. Okay, good. So it's, we're not going to just dump. I mean, obviously to the downside, you could get those big surprise moves. That's always possible. Son of a bitch, they're doubled already. God damn it. That's trading for you. They're breaking this pivot too. This sucks. I would have doubled in 5 minutes here. Man, I swear to God, if this thing drops like another point, oh my God, I'm going to be really pissed then. It shouldn't though. Based on this posture, it shouldn't. God damn it. Alright, I am definitely getting in on any dips here. Or bounces, however you want to look at it. I really hope they crack under 376 on this 5 minute. I have a feeling they're not. There's that ghost candle foreshadowing 375.12. So see, I'm sure if you guys were listening, you followed what I was saying. That at a minimum they're cracking 375 and probably hit 374. So if I would have got them for 80 cents, that would be 150% on those 76s. That was my idea. That the chart wasn't quite yet ready. We had some signs, and that's why I wanted to get in preemptively. This shouldn't run away. So these damn 76s now are $1.50. I was looking at them at 85. Now you got the 20 right here. Man, my gut feeling though with the big move down that you get some surprise rug pull here. I still think that's possible, but yeah, being objective here, looking at this, they may push a little bit more past that pivot. I think they will. They may come back. Maybe they stop up here at 37, 62, 60ish on this run, but then they should come back. It just sucks because I'm still at a double on those 376s from where I wanted to get in. So my thesis for you're probably not going to get that price again was correct because they're close, at the money. All right, now where do you get in? Well, you shouldn't chase it here. They may push it quickly to get out of this hole to kick off the turn of these MAs. See, just because they're still facing down doesn't mean the move has to be over. They could give that one more push to kind of give these the energy to start to turn, and then after that push, they get to pull back and maybe consolidate a little, and then make the move. But the 15-minute is saying relax. I really hope they come deeper. I hope they come under this 37.80 on this 15-minute. So 37.81.5 is where I want to get these. I'm going to buy them. $37.81.5 on the buyer. God damn it. They froze my chart. Stupid bastards. Look at this shit. Come on, pull back. Crack that 80. Swear to God, if this thing just falls out of bed, I'm gonna be so beyond pissed. After all that talk, sitting comfortably at a double from where I wanted to get in, and it's not looking back, I will be pissed. Because again, I think there's a chance we could even crack below a day today. As I was explaining earlier, there we go, I swear to God. They better not just fall out of bed here. Son of a bitch. Son of a bitch. God damn it. Stop. Speaking of bleeding, your puts aren't bleeding anymore, but we need the market to stop bleeding. Let your puts bleed a little bit more so I can get in here. I swear to God, if they just pop this, don't even do it. I mean, it's not going to crash, obviously, but those 76s under $1 were a great price. A great price. Even if this is only a normal pullback, those would have worked out really beautifully under $1. Because 374 is definitely getting hit. And probably cracked. That ticket right there. So this posture right here, this has a we're taking off look. That, you know, this move could crack open to the downside. God damn those 376s, son of a bitch. Alright, I'm YOLOing the trade. Fuck it. I have a feeling this could fall out of bed. I got the 75s at 41. 141 on those 75s. I was going to be so pissed if this falls out of bed. I have a feeling it could. We're breaking that 74 for sure. If not, oh well, so be it. Now I'm going to pay. Watch, look, now I'm going to pay. That's what I get. Ah, son of a bitch. That 15-minute says chill out. But, man, you know, like what I laid out earlier, I just don't trust today. Like, I think it's possible we break low days, crazy as it may sound. And so what's low a day? This is why I just jumped in right here, because what's low a day? 70? So those 375s I just bought, I could have a solid, like, 4-bagger. Alright, let's get our bells in there. I'm in the trade. It's been, like 4 days since I took a trade, since I didn't take a trade yesterday. Man, isn't that crazy that I freaking get in these 75s after my 376s double? Yeah, see this look? See what I was talking about? This look right here. Remember what I was saying on this Stoke right here? That look of that, and then this? That's not a good look. This has to keep going. And it's playing out here. I mean, I kind of chased the trade a little bit here. I totally admit that, but you could say it was FOMO. And the reason I FOMO'd it is because it's to the downside. And I would have been so pissed if they just, you know, cracked down another point. So pissed. And then I would have never gotten the trade. I sure as hell wouldn't be chasing down as they're under 374. Wouldn't be getting in the trade done, that's for sure. What puts were you in, Victor? 74s? Let's go. First ball of the day. Let's go. Those puts are printing now. Let's go. We might flush 74 in relatively short order. Like I said, the 5-minute MACD posture has a look of cracking open to the downside. Like this is going to break open. So breaking 74 in short order is very possible. Victor, what are you in, the 74s? Yeah, this is not good for the longs. I'd be very, well, I wouldn't be in the trade anymore, but man, if they could crack 74 on this candle, that'd be sick. That would be showing some authority to the downside, and it's sure looking like it will. It's looking like this could just fall out of bed. Victor has left the room. Oh, well, what did you get? I asked you a couple of times. The 374s? We need the next candle to close under or crack 374. That 374 has to get cracked sooner than later to prove the bears are in control here. Yeah, this candle here, for my thesis, my analysis to play out, this candle here needs to close under 374. For this move to crack open to the downside, so to speak. Yeah, for Friday you're okay for Friday then. When did you get in? Well, obviously above 76. Man, I'm so pissed about that 376, man. So this is a little concerning here. This tapering of the volume here. All right, so you're good. Yeah, this candle, we really needed follow through on this candle right here, so this isn't looking good for right now. It doesn't mean it's over, but well, obviously this is a 1 minute. I'm sorry, 1+ point reversal in the works right here. But just based on the posture of the chart, we really needed this candle here to close under 74 to keep that cracking open to the downside posture. Keep that going and in play. Well, let's see. The low is 62. So it's not over yet. This is still a bear flag. Uh, but the volume coming down here was a little concerning. The 15 minutes still needs work. Yo. Well, you missed a really nice squeeze. I wasn't awake for that, and I'm not saying I would have played it either. But right now I'm in some 375 puts here, and I think we could have a crazy day today. Like, I think at a minimum we're coming back here to 372.50, and it's possible we could break a lower day. So I kind of laid it all out earlier. I'll probably talk about it again, but I mean, right now that's the chart's not supporting that now, but I would be surprised if they don't at least make an attempt to crack that 373. Oh, this is the 5-minute I was talking about. Oh, are they going to rug pull right here? Are they going to rug pull right here on this 5-minute? Come on, baby. Let's go. Flush it. Oh, baby. This is what we needed on this 5-minute. We needed that 374 close on this 5-minute. Oh, this could get vicious. This could get vicious. Let's go. Alright, I'm up 25% on these 375s in 10 minutes. I'll take it. This is what I was talking about. I was getting worried there for a minute. A close under 374 on this 5-minute would be sick. It's kind of needed. Well, we don't have enough time here. Damn it. It was looking like it. Damn it. The reason we need it, I mean, it's not over, but the posture, this is a cracking open to the downside posture. You want to see this crack open. The 15-minute doesn't support it, but when it comes to the downside, the downside's different. So, and if we're going to 360, not today, but if we're going to 360, that 15-minute doesn't have to be in the perfect posture to kick off the move. The 15-minute posture could be like, okay, it's a bearish posture, once we're down here at 373. You have a lot of reasons for this too, because this big squeeze up higher, everyone's trying to pick the bottom. But like I laid out, that daily and that weekly is fully bearish. Fully bearish. Fully supporting. It's unlikely we don't crack that prior pivot low. Whether we get into the 350s is one thing, but not cracking that prior pivot low, and then just the bottom being in, I don't know about that. I don't know about that. Well, man, how sick. If we break low day, if we break low day, man, we're filling this gap. If we break low day, this gap's getting filled in probably 364. Like, that's how crazy it can get. Like, this is the setup for something like that to happen. And so far, it's kind of working out here. It's kind of working out here. Come on, close that 374 on this candle. We really need it sooner than later. Sooner than later. Come on. We're green on the trade, but to get paid big, that has to happen sooner than later, that 374 close. Like on this candle. It had to been last candle or this candle. If we close under 374 on this candle, low day is getting broken. It has to happen on this candle. Like no questions asked. Because the next candle, we could get something stupid back down to 373 or 372. I'm sorry. If we close 374, that opens up the possibility of 372 in the next 10 minutes. Oh, it's happening, baby. It's happening. I can just see the posture. This is the cracking open to the downside posture. Let's go, baby. $374. Let's go on this candle. I'm green regardless, but I'm getting excited for where this could possibly go. There's a lot of potential on this short. A lot of potential. Come on, we need that 374. Come on, push it. We got another minute left. Let's go. We really need that on this candle. It has to happen because we need this posture to stay strong as possible, and they can't be playing games with that because if there's real sell side coming here, they're not stopping at 374. You know, they just blew through it here on the move up, so they absolutely have to do the reverse on the way down. The 15-minute is the concerning chart that it's trying to turn. That's the 5 minutes fine. The 15 minutes still not ready, so to speak. Come on, push it a little bit more. Crack that 374 on this candle. Son of a bitch. We really needed that follow through on this candle. We really needed that follow through. I mean, if they close under 25, that's not bad. But right here, that's not good. Come on, close under 25 at least. We are extended, but again, to the downside is another story. Okay, so that's not a great close here. That's not what we really wanted. I mean, it's not over, but that's not what we wanted. Now they're probably going to come back to 375. Did this candle happen? I think it did. Oh, it did. That's that one reversal candle that I was worried about. That's good just for the fact that, 375, they already did 375 here on this candle. They'd probably do it again just because these MAs, but oh man, if this candle would have closed under 374, that would have opened up the possibility for a waterfall to 372. That's a shame. The market had the opportunity there to really break it down, break it open to the downside here, right here. Again, it's not over because this is not looking like a regular pullback here. This is looking like a reversal. The volume could be a little bit better here. I don't want to hear that VWAP anymore. Screw VWAP. VWAP, you know. So okay, we broke under VWAP. Let's go short. You know, 2 points off the high. We're going to start going short because we broke VWAP. I mean, obviously, breaking VWAP has to happen if we're going lower. So yeah, you know, that is a sell entry, I guess you could say. But you're 2 points off the highs. That's why I don't like VWAP. It's just a reference point. That's all. The VWAP to me is like this 200 up here. Like, oh, we're under the 200. Well, yeah, of course that's bearish. Duh. But the 200, you know, is over 6 points away from the high. So how does that help you getting in the trade? It's just a reference point. Meaning if we get to the 200, okay, then maybe you want to take profit off. Just like VWAP. You know, if you're shorting these highs here, getting the VWAP, okay, maybe you want to take some profit off as a reference point. So we're still in this bear flag here. So at the moment, it is technically just a pullback. But this hourly here, it really needs to hold. This hourly, I mean, we got, you know, over 15 minutes. This hourly has to close under 74. Has to. For the possibility at a 372 or low a day run. So it is a little concerning here that they didn't even crack 374. You know, as I was explaining earlier, that kind of was needed on the 5-minute to close under there to keep that bearish posture very strong, because it was looking like, see, this here killed this move, because earlier here on this candle, this is where I was talking about, it's looking like we're cracking open to the downside, because the way this opened up here had a posture that, you know, we're going to get a bit of a waterfall pullback, cracking open this momentum here. So now that they hit the brakes a little bit, you know, I'd be surprised if they don't break the 373 pivot right here. You know, now the way the chart is right now, with them hitting the brakes, as of right now, breaking 373 is going to be the target. You know, this is kind of killing the potential of the trade. The big potential it had there, it was looking like. So, you know, this is normal, you know, battling 375, but when I'm talking about the big potential it had, you know, you're not going to hang around 375 because it's the big round number. I mean, hell, look like they did here. Look at this bullshit, just cracking through all this shit.
See what I mean? Look at this crap. So to the downside, you definitely don't want to be playing games with big round numbers like this. They have to. It has to act like they're not even there. I mean, hell, they did it here to the upside. This is ridiculous. This is unusual. This is like five, probably 5% of the time you get something like this, blasting through the entire prior day. This is another clue why I think this was bullshit, because this doesn't happen. Blasting through the whole day in one swoop, through the gap, through high of day, just like nothing is there. That was bullshit. That's a bullshit move if you ask me. And it's sucking people in. And so now I think people are buying the dips, thinking, this is a bull flag. So this is me. I am projecting a bit here, but I have that daily and the weekly backing me up. It's kind of like in 2021, the non-stop grind higher, the strong weekly, the daily, strong pretty much all the time. That was, your tailwinds pushing the market higher. That if you're going to get in on dips, you're likely going to get paid because of that weekly. So it's kind of the same concept here to the downside. The weekly hasn't proven itself at all that we're done going down. So right now this is not good, because the longer they do this, you don't want to see this. Now it's looking like they're coming back to 50 right here, even though they already get it here. So it's not over. Not over. It's just not ideal. The 15-minute, like I said all along, wasn't supportive of that. Even if you look on ES, hell, look at the 9 right here. So we're still the Bulls still have the edge on the 15-minute. And see here, now we're even breaking 50. So hopefully this doesn't turn ugly here. And I don't think they're going to just rip it up high day or whatever, but we wanted that follow through in relatively short order. So realistically, this 15-minute has to close under. Yeah, that's kind of a must. If this 15-minute, which is also the hourly on SPY, doesn't close under 374, that's trouble. Not trouble as in the downside is completely over, but that's definitely not just ideal, but sort of needed. See, now it's getting a little ugly here. This is not what you want to see here. You said you're in the oh, he left 374s for Friday. I think he said he's in. So that's the 24th. Oh wow, those are. I thought those aren't that expensive actually. Well, yeah, it's only 2 days away. Back at 9:40, those 374s for Friday really saw some pretty good volume coming into them. So that was oh, that was at high day. Wow, so someone stepped in there pretty good. There were 6,000 contracts bought on those 374s in a span of 2 minutes. So right here, the minute after high day right here, This is where they bought them right here. These two candles right here, someone stepped in and bought 6,374s right here. Yeah, so here's what I get for FOMOing. All that patience talk and all that stuff there. Man, it really looked like they were going to crack it open. Because the 15 minutes not supporting, now look, you got the 200. Oh yeah, Vlad, you there? He might be away again. I'll wait for him to come back so I can explain what happened earlier. Missing those 376s under $1. I swear to God, if I paid for this, I'm going to be pissed. Those I could have got those for 85. There's a nice 3-bagger on those 86s. That was the trade. That was the safe trade. Alright, this is not good. They really need to get out of this hole here. I might have to bail on these. This 15-minute really needs to close green at a minimum. At a minimum, close green. This is not good. Alright, I'm going to turn off the mic because it doesn't look like there's anyone here.
Good evening, all. Ira Epstein with your Spider ETF market wrap-up. And this wrap-up is for Tuesday. And here we are now, sitting on the 21st of June, 2022. So, an update. Yeah, it's a turnaround Tuesday. You know, the markets weren't open, though, yesterday, so I don't know how you call it a turnaround from what. Normally, it's from a Monday, so I saw some people label it that. I'm not buying that. It's an up Tuesday because you weren't open on a Monday. And a lot of the markets were up. I've added Chewy to the stable of things I want to watch. You know, I rotate things every now and then for you. You can see that gold down, most other markets to the upside. So let's take a look at some of the charts and get a feel, if we could, as to where we're at. Here's Chewy on a daily bar chart. And obviously, this market came down from the 50-plus level all the way down, 50% break recently, into the 22.5 zone and picked itself nicely back up. The question is it getting a little bit extended here? I love pets, I have them on my own, and I use Chewy, so that's one of the reasons I wanted to bring this up. Higher lows, higher highs, trend up until and unless the market takes out 2780. When I bring on moving averages, I've got the 50-day right here, the 100 in green, the 200. So we have layers of resistance with the support all the way back at 2774. But right now, in order to get to that number, you'd have to break the last swing line low and take yourself out of an uptrend. I don't think that's going to be the case in the near term. I think the market's going to fight a battle trying to hold on to 3041. Where's the resistance? You're at it. The upper Bollinger Band is sitting here now, right where we're at 3186. We settled 3185. Each time we've recently gotten up here, the market has backed off. I don't think this is going to be too much different. And when I look at momentum, we're overbought. So I have a market that I think has nicely rebounded from this recent drop that it got up here, as I said, over 50, made its way into the 22.5 zone, but I'm not looking right now for a lot more. If the general market were a lot more bullish, I would, but that's not what I'm seeing. I'm seeing a bounce in a market today that's nice. Nothing goes down forever. A bounce is more than welcome, but I don't see this having been the low of the stock market as a whole. When we look at AMC, it's stuck. It's caught right here. I was looking for a lot better action than this. Obviously, the Pixar movie that came out this weekend was a dud. No other way to call it, a dud. I know some people say, well, it didn't do bad. It did bad, all right? These movies brought out right now are supposed to be the gangbusters. The market seems to be caught between the upper Bollinger Band that it can't quite reach now at 1427, the lower band at 1108, and it's really just almost every day going either side by a little bit of that 18-day average and not going anywhere. The general trend is down, lower highs, lower lows. The market settled at 1250, which is under the 18-day average of closes. The bias is down, but momentum is trying to pick itself up right here. The bears have the upper hand temporarily. In Apple, should Apple be able to get back over 137.34, you probably open the door for the market to make a run to the 18-day average. Should it not be able to do that and start failing, because you're so oversold, I'm not going to say you're going back to 127.50. If this were to develop what we call that embedded reading, where you get both the red and the blue going sideways under the 20 level for several days or more, then I'd get bearish again. But right here, I don't know. I think that it's time to walk away from this for a little bit. Disney, still in big trouble. Would you think Disney'd have trouble at this time of the year? And yet, take a look at it. This stock, new lows. I mean, for all purposes, that's where you're at. You're at 93.27. You come back here. You've been in this zone before, but you're not lifting at all in this market. Not lifting is not a good thing, as we can see. Let me see if I can get this to do what I wanted it to. I'm not sure I can. Okay, now can I get it to step back on it? That's what I wanted it to do. So if we take a look at the most recent lows, and that's what I want us to do, it was 93.10. So now as we go forward with the market, and this is just what I wanted to show you, today you get down to 93.27. You haven't taken that out, but if you do, it's going to be one ugly chart. So they haven't been able to get out of their own way. When we take a look at XLF, the financial services, the market, in my opinion, started making its stand right here. Now, let me give you the thing I'm very, very concerned about. Do you notice how the market's starting to develop the embedded reading? You need 3 days in a row where the numbers stay under 20 on settlement, both the red and the blue, called the K and the D lines. And when they do that, what it typically does, and let's see how many we have here. I don't think we have 3 just yet. Nope. 1, day 1, Friday. Today's day 2. Tomorrow's going to be a key day. An up day tomorrow in the stock market, and if it carries a lot of these, could stop the embedding process. If the embedding process kicks in on the close, that means come Thursday, I know I will be getting aggressive to the bear side. I'll get out of the market's way if the red line closes over 21 after I tell you to get short. But until that point in time, no. Is the short signal here? Not yet. We got to wait and see if they develop. Let's go to the next chart if I could right here. Here it is. XLI. Oversold, not embedding. down into the Bollinger Band and sort of just hugging it at this point. Does it embed? Well, it's not even begun the real process. You need 2 more days of it to know. So I'll call it oversold into a support zone. Certainly no signals to get long. In the semiconductors, I'm looking at what's going on here. I was reading a story today as to how powerful China is becoming on semiconductors. You know, once the U.S. under President Trump started banning all kinds of technology and trade secrets, patents, and all that China could use to make semiconductors, they went their own way. And I was reading a report today that the U.S. would have to probably invest $6 trillion to catch up to where they're at, subsidies, grants, and the like, to get ourselves up to about where they're at. Can we do that? Yeah. Is there a stomach for it? No. So that becomes the new issue, a big issue. We'll be buying chips for a long time. There's just not the stomach to do that. So I'll be watching to see if you embed. And that's a theme we're getting. One of the themes is we've come down and we've sort of died. We've gone sideways. You can either embed or get more of a correction to the upside out of that. If you embed, it tells me there's another leg to the downside. Tomorrow, by the way, we get word from Fed Chair Powell. He speaks for 2 days in front of Congress starting tomorrow. I think it's the Senate first, then the House the day after. So at about 9 o'clock, he'll be speaking. They'll be asking a lot of questions. Where are we? It's a political year. It's going to get nasty. They're not going to be his friend. Here, too, you have an oversold market in housing. Market's just not looking good. If it can embed, I got to get even more bearish on it. Energy sector, oversold into the first challenge of the 100-day average in green in the Bollinger Band. I think the pros came out, you heard me, out of being in the short side of this market right now. Now, the more I'm reading about what the U.S. is not doing, the more concerned I get. We're just not seeing our oil companies throw money and develop more wells, more infrastructure of really any type. We're investing about what we did in 2019. We're not picking it up from there. So we've got a status quo like this. Is it enough? Well, if you have a worldwide recession, it probably is. People don't say that, but I think it is. If you get a bump in the world economies, it isn't. Where's China and India getting their oil? You know, they're picking it up right now. It's very clear they're getting it from Russia. They've backed off on OPEC. In fact, Russia is now the largest provider to China of oil. And remember, Iranian oil, a lot of that goes into China as well. So you've got all this going on. Should get interesting. We're nowhere near done with the Russian situation with Ukraine. That's going to just drag on for a very long time. In gold, how do you get more neutral than this? Bearish, neutral to bearish. You have to take out, for me to get friendly, 172.77. If the market were to hit that, one of the things I told my paid subscribers this morning was if it hit that, I think you take a nibble with a straight stop under whatever today's low was, one tick under that. It didn't happen. I also said you could probably go short right there, looking for the market to come down with the stop at that level. Either one of those trades seem to me to make sense right now. GDX, no. GDX is just a market that is in oversold territory and bearish. The oversold keeps me away from it. Copper, oversold, not lifting itself yet at all. 5 cases were reported today in Beijing. Now, out of what, 22 million people or whatever, 5 COVID cases, and I'm supposed to believe that. Some of you write me and you think that I say this and I believe what I'm saying. I don't believe it. I think China lies about everything. I think if you think you know what their GDP is and their growth, no. The way that you measure it, though, is electric usage. And that's been around for a while, and it gives us a better reading. Are they telling the truth on some things or not? I don't think they tell you the truth. AGG, oversold condition. You lost the embedded reading, and when you did it, you normally run to the 18-day average. That gets thrown out the window if you make a low under the most recent low, whatever it is, just before you lost the reading. So that's still an open target, but here's what I think is going to happen. I think this average is just going to slowly come down, and by the time the market gets to it, it's not going to be a move of much of anything. Could I be wrong if all of a sudden we were up sharply tomorrow? Sure, but What's going to make it go up sharply? Then we get to the dollar index, which doesn't have a pattern that I like. You have the higher highs and now lower highs, higher lows is what I meant to say. Momentum sort of drifting to the downside. The dollar's actually gone into a very neutral stage, not doing anything one way or the other. So whenever you see that, the one thing you want to do is be very careful. And if you look at the euro currency, the momentum has gone flat. The trend is down here. Are the pros selling? I doubt it. Why? The flip-flop. Lower highs, but higher lows with today's action. I think you've gone into a pause for a near term here. And whenever you go into a pause, the smartest thing you could do is just step back and say to yourself, okay, let the market pause itself out and we'll see just what it wants to do, one way or the other. Let's see if I can get this to open up for us. I can. And there we are. In the mornings, you always hear me talk. I've told the subscribers to do this and that, and there's a reason for that. At 5:30 in the morning, I start out talking about the futures markets. But remember, that means IWM, DIA, SPY, QQQ, TLT, GLD. I feel like a dancer. SLV. I'm covering the futures. Then at 9 o'clock, Good morning. Ira Epstein with your Morning Flash Update. And this update is for the morning of Wednesday, the 22nd of June, 2022. Time getting on to 8:40 a.m. Central Time. So as we take a look behind me, the stock market giving back a chunk of the gain. Gold saying that, the 1800 level might be too cheap. I'm going to hold above that. Dollar backing off a little bit today, but it's an uneven road as the currency markets are back and forth right here. I'm very bothered that Dr. Copper just acting terrible. Market now cracking through the 390. This is more than just China. This is the world slowdown. The recognition that most of the world's in a recession. People won't say that until the economists get the exact numbers, which brings me to this statement. This is called a futures market. It looks ahead, not behind. What's it telling you? If you look at energy prices, you're $10, well, more than that, off the highs that we made. $2 lower in nat gas. Grain prices breaking down about $1.50 in many cases from where they're at. Cotton, a lot lower. Where am I headed with all this? The futures market is telling you that the inflation peak may well be behind the market already. It would take another shock to get it going. The fact that Dr. Copper, and I really look at copper as the industrial commodity worldwide, the fact that it is so weak tells me we're already there, that prices have backed off, we've seen the peak. Now it's just a question of the data counters catching up with everything that we're seeing, and I think you'll see that roll in. That doesn't mean you won't get bounces along the way, but as for the peak, I'll stick my neck out. We have peaked, past tense, and the market is probably getting ready to let us know that by the fall at the very latest as all the economic data starts rolling in a bigger way. Now, one of the things that we want to look at today, let me get over here if I could, so we can look at the morning data for us. The mortgage market headline recap, up 4%. I'm shocked. Mortgages up dramatically, 6%, and here you are with that. The purchase index, people are buying. Okay, it's summer. You got to move, you're going to move. Redbook numbers, they've been running between 11.5% and 13% as they go from June to June, the different weeks. That makes sense. Federal Reserve, Fed Chair Powell right now is in front of the Senate committee talking. His prepared speech, he's not going to say anything different. Now he's selling what he's doing. He's not telling you what he's going to do. He's selling the Fed's position that they have to fight inflation. At 11:45, Chicago Fed President Evans will talk. API numbers will come out a little later today. We'll see those as as they step into the marketplace. UK inflation hit about 9% today, 9%. So they have nothing but problems. President Biden today, he is going to try to sell to Congress that there should be, I think it's an 18.8 or 9 cent tax abeyance. They're going to not want to collect tax on gasoline and about 24 cents on diesel. I don't think it'll fly. I think that we're too smart for this. We know that doing that's just going to increase demand at a time when we don't need that. Let the market forces take care of that. I doubt that Congress has the stomach to do all this and just keep time after time, if you will, doing things of that nature. So one of the things that you want to always be on the lookout for, and I use the word always, how do you take advantage of some of the things that are going on? And our futures trading kit will do this in large part for you. It is a complete kit. Everything from courses, videos that I've put together with 2 different charting courses, the Arun indicator and pivot points, the tools for the beginners, chart patterns. You know, we all like chart patterns. Print them out. I give you the typical chart.
What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today we did see a very strong bounce in all of the indices, but overall we still have a very strong downtrend and we're still in the thick of a bear market. Can we rally into the month end, or is this just a bounce before we continue to go lower? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 2.52% and SPY did close back above that very critical level at 370. So while I do believe we will see an end of month rally, which could take us all the way back up to close both of these gaps, which means SPY would go all the way up to about 401, you still need to have a risk level, and right now I would continue to tell you to use that level at 370. So while SPY is above 370, I would expect to see this counter trend rally, but as soon as SPY starts closing down below 370, I would instantly start expecting SPY to start trending down towards 350. So as traders, you always need to manage your risk, and as a long trader, you need to set your risk right here at 370. And if you're still short in this market, you need to be a lot less bearish while SPY is above 370, because there is the real possibility we are trying to rally all the way back up into the 390s and possibly even 400s. Now, without a doubt, this is still a very strong downtrend and we're still in the thick of this bear market, so there's no reason to get bullish just because we're bouncing. So I continue to tell you to treat all bounces as a potential lower high before the next leg lower to put in the next lower low. For all we know, this is going to be a bear market that lasts the majority of the year and maybe even longer. So you are not going to assume that the bottom is in until we start seeing bullish price action that consists of higher highs and higher lows. The bulls have a lot to prove before we ever assume this bear market is over with. So continue to get comfortable seeing lower highs and lower lows as we continue to trend lower in this market. Now that doesn't mean we can't get bear market relief rallies, and that is exactly what I'm expecting to see at the end of the month, as long as SPY is above this level at 370. As soon as we break below 370, look for a retest of that low right around 365 and that brand new low price target at 350. And if we continue to trend higher, you're looking for very strong resistance at 385, the gap close at 389, and if we continue to trend higher, you're looking for strong resistance at 395 and the gap close at 401. Remember, it's a bear market, so bears will be waiting at every single resistance level, so the bulls have a lot of work to do going against the trend, blasting through resistance and trying to get a counter trend rally. So the next couple of weeks, I do expect to be very volatile, because remember, volatility does work in both directions. So we're either going to get a 20-point move to the upside or likely a 20-point move to the downside. And that is why you need to use that level at 370 to let you know which direction we are likely going. It's as simple as whether or not we are above or below 370, so do not overcomplicate it. On the NASDAQ 100 triple Qs, we were up 2.33%, and the triple Qs did close back over the 5 EMA, but we are still below this resistance at 285. If you look at the overall structure of the market, it does look likely that this could be the end of some type of down move before we get a relief rally, before we go any lower, but we still are trading below this level at 285, which is the previous support. And it's obviously the newfound resistance because we failed to close above that level for 2 times now. So if we get rejected from 285, that will be bearish, but we still do have support down here at 275 and 269.5, and our support trend line right around 266. Remember, you are at increased risk of capitulation if we break down to new lows. So as soon as we start breaking down below 269, you instantly need to get a lot more cautious of a next leg lower, which could also be that leg lower that causes capitulation. So your risk level for the triple Qs is down here at 269, and if we can break above this resistance at 285, then you'll be looking for gap closes just above 288, strong resistance right around 294, and then the next gap close at 299. There will be bears waiting at all of this resistance, and we are still in a downtrend. We're still in a very strong bear market, and the triple Qs have a lot of proving to do from the bulls before we ever get bullish on this ETF. So remember, in order to get bullish, we need to see higher highs and higher lows, and we need to break all the way back above this previous high right around 315, and that is going to be a lot of time coming for the bulls before we get that confirmation. So continue to respect the bear market and the downtrend, and treat all of these resistance levels as potential lower highs before we continue to make the next leg lower. In the Dow Jones, we were up 2.2% today, and the Dow Jones did give a bullish indication today because we did get that gap up, which did leave an island reversal pattern, which is usually a trend reversal pattern. So we're in a bear market and we're in a downtrend, and we're getting this island reversal, leaving the last 2 days of price action on an island. And that could mean that we're done with the downtrend in the short term, and the Dow Jones is getting ready to go into an uptrend. Now, in order for price action to confirm that, we will need to get this close above right around 311 and fill that gap at 314, continue to trend higher to break back over the 20 simple moving average at 319, and close the gap above 323. So there is a ton of work for the bulls to prove that this is the real deal island reversal, and it's just something to be aware of. It is not something I would put too much weight on while we're in this downtrend, unless we can see price action breaking back over 311. Your risk off level in the Dow Jones for capitulation will be the closing prices below about 299 to 297. So make sure if we start breaking down to new lows, you are at increased risk of capitulation, so just be aware of that. We're no longer getting the island reversal if we fully close this gap down here right around 301, so pay attention to that downside support as well. In the Russell 2000 IWM ETF, we were up 1.79%, failing to close back over the 5 EMA, and as you can tell, we are still in a very strong downtrend and a very strong bear market in the small caps. In order to start getting more bullish in the small caps, we need to start closing back over 175, close the gap right around 178, break back over the 20 simple moving average at 180, and fully close the gap just above 183. That is a lot of work for the bulls, so pay attention to all of that critical resistance, and there will be plenty of bears waiting at every single one of those resistance levels, so it will not be a smooth ride for the bulls. On a breakdown below 163, we get that next leg lower with valid price targets to the downside at 160 and 156, with 156 being the valid price target for a capitulation scenario. On the RK ETF, we were up 4.38%, and RK did close back over resistance at $40, but we need a second day of follow through, and we have very strong resistance just above right around 42 to 43. If we get the close above 43, that will look like a bullish breakout above our resistance trendline, but we still have very strong resistance at 47, so you cannot get bullish until we start getting consecutive closes above the 40s, and if you want to be even more cautious, wait until this ETF can close above 50. To the downside, you now have support at $40 and the gap close right around 39, and if we break below the gap close, you're looking for a retest of the lows at 36, and below 36, we still have that valid price target at 33.7 as long as we're in the bear market. This ETF has been in a bear market for a very long time, so I definitely do not suggest getting bullish on something that's in a strong downtrend until we get bullish price action confirmation, which we don't yet have. On the VIX, we were down 2.71%, and the VIX did find support right around that level at $30 and failed to close above it, even though we did get a very strong bounce and a very green day in the markets. This is definitely a warning sign I wouldn't completely ignore. The VIX is in a bull trend, still trading above 30, so this is still a very volatile market, and as long as the VIX is above 24, it's going to remain a volatile market, and it's definitely going to remain volatile while the VIX is above 30. So the next bullish breakdown in the VIX would be closing down below 28 and then getting that close down below 24, and remain very cautious of that capitulation above 30 because we could still see the VIX spiking up to 38 and possibly even higher before we reach capitulation and put a bottom in for this bear market. On Bitcoin, we're currently up about 1.4% with Bitcoin trading just below 21,000, and as you can tell, we did test that support zone right around $20,000. And we did get one day closing below it, but not the second day of follow through. So whether or not this is just a dead cat bounce in Bitcoin before we trend down towards 12,000 is to be determined, but I do expect to see $20,000 in Bitcoin holding up as support for at least the indefinite future, because I do think there will be a lot of buyers at this level. If 20,000 holds up as support, you're looking for a bounce and retest of the breakdown at 28,000, but overall this is still a downtrend in a bear market, so don't expect higher highs and higher lows until the price action confirms it. On a breakdown below 20,000, you're looking for that next price target to the downside at $12,000. On Nvidia stock, we were up 4.32%, and Nvidia did close back over 161 after looking like what could be a double bottom off of 156. So the longer Nvidia is trading above about 165, the more likely that is going to be a double bottom, which could easily take us back up to fill the gap right around 180. Above 180, we still have resistance at the 50 EMA at 189, and then we need to break above the previous high at 196. So there's still a lot of work for the bulls to do in this stock. If this is just a bounce before we continue lower, we still have the valid price target at 150, and below 150 you have that full-blown capitulation support at 125. You can start getting more bullish on this stock if it starts breaking above the 20 simple moving average, which is currently right around 175. On Tesla stock, we had a very bullish day today, going up 9.35% and closing back over that resistance at 700. So if we can get one more day of follow through, closing above 700 for the second day, that will be bullish price action. You can see price action is starting to break above our resistance trend line, breaking back over this previous high at 700 and closing back over 3 of our 4 moving averages. The next critical test of resistance will be up here at 775, and if we get that breakout above 775, it will look like Tesla stock has the higher high and the higher low, which could send this stock into a bull market. So whether or not this was just a false breakout before we continue lower or the real deal bullish breakout is to be determined as soon as tomorrow, but so far this does look like a very nice green day on increasing volume, so I wouldn't completely ignore the fact that Tesla stock is showing some bullish strength. On a break back below 700, look for a retest of the breakout right around 690, and below 690 we still have the gap close at 650, strong support at 620, and the next leg lower at 571. But this is a lot less likely that we're heading lower while we're trading above $700. So right now I am leaning more bullish on Tesla stock. On Apple, we were up 3.28%, and Apple did gap up and test resistance at 137, but so far failing to close above that resistance, which means we could come back down to fill the gap at 131.7 or retest the price target support at 130. Below 130 will likely get capitulation, so that is a very critical support level for the bulls. And above 137, that will look like a bullish breakout with upside price targets at 141 and the gap close at 142.5. Above the gap close, we have the resistance trend line at 145 and very critical resistance at 150. So there's a lot of resistance for the bears to work with while we're in the downtrend in Apple stock, with that very critical support for the bulls to hold at 130. On the financial sector, we were up 1.45%, and we still do have 2 gaps to fill to the upside, but still failing to close back over the 5 EMA. So the bears are still very strong in the financials. The industrial sector was up 1.38%, bouncing off of our trend line, but failing to close over the 5 EMA. And while we do have gaps to fill to the upside, it still looks like this is a very strong downtrend. The healthcare sector had a strong bounce today, going up 2.26%, closing back over the 5 EMA and getting very close to filling the first gap. It's still in a bear trend and still trending lower, so don't get overly bullish until we get that bullish breakout. The energy sector was up 4.01%, but this looks more just like an oversold bounce because we were way below the lower Bollinger Band and we didn't even bounce back over the 5 EMA. So it definitely looks like the energy sector is out of the bull market and going through that full-blown correction. So do not get bullish on the energy sector while it's trading below 77.5. So jumping back over to the S&P 500, please remember that this is still a bear market and this is still a downtrend. So even though we do expect to see a bounce into the end of the month, you cannot completely ignore the fact that if SPY breaks down below 370, we could be reaching capitulation. It's very important that you protect yourself to the downside in a bear market, because just like a bull market where you don't want to bother trying to call the top, in a bear market you never want to bother trying to call the bottom. Nobody knows where the bottom is in this bear market, and things can always go from bad to worse. So just follow price action and have a very solid trade plan, and always use proper risk management. No matter what you're doing as a trader, you need to know when to cut your losses when your trade plan isn't working, and move on before you blow up your account. For that reason, treat SPY 370 with the respect that it deserves. And if you're bullish above that level, you need to get a lot more risk off if SPY closes below that level. If you're a bear, you still need to be cautious shorting the market if we are getting a counter trend rally, because you don't want to be holding short while SPY is running from the 370s all the way back up to 400. So no matter how you're trading this market, you still need to use proper risk management. So don't throw caution to the wind. This is still a market that's very volatile, and volatility does work in both directions. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your and bring new trade ideas to you weekly. If you're interested in joining the Stock Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.
Alright, finally, Jesus Christ. You guys see this little, what I was talking about here? This sleepy, this slow pullback? I mean, this is a bear flag, but I don't know if they're going to flush it. It's a little bit of a stretch. We're not that far away, but I hope they do close it nicely because we want to get that capitulation by Friday under 360. So everybody should be rooting for that. Because as it is right now, the chart is not, you know, it's just an ugly chart if they bounce it, and I don't know, it's just an ugly chart right now on the daily to give any actionable setup. So we want that capitulation under 360. You know, it doesn't have to be by Friday, but we want them to capitulate. You know, get this done and over with. So you know, we get some real price action here. You know, that's why we're getting this stupid price action here, because we haven't had the true capitulation yet. So the big money, you know, you're getting all these games. The big money's not stepping in yet until we bottom. But let's see if this plays out here. Right here, here's the, you know, it's a little bit of a stretch, but not really. You know, we're only talking another good dollar. And now this, and then, you know, once we break that 74, I mean, that's only a little bit extra. So come on, let's go, baby. God, this, you know, this whole time, you know, you'd have to be in Friday calls to pay here. And even still, this stupid grind up here is just retarded. Look, you know, sideways, okay, yeah, a little push. I mean, you know, it's just slow grinding. And then here, you know, it just, I'm gonna be, if we hit, you know, I'm pretty much, well, I'm about, my average right now is about, I think 85 right now. I'm trying to eat right now. Yeah, you're in Friday, Victor. I was going to tell you earlier. I didn't tell you I was watching YouTube videos, but for Friday, I was going to tell you you're okay. And I'm not just saying that because this is happening, but I really think tomorrow and Friday we could really actually have a chance at that 360 break. And this is exactly what we wanted, not just for you, but the overall market. We want this to give us some action. Oh yeah, I was watching YouTube videos, man. This market put me to sleep. There's nothing here to trade. Not until we got in the bear flag from you know, an hour ago. You know, we are extended here, but going into the close, look at the volume too. The volume's pretty good here. So I think they keep it going. I wonder if they're going to flush it on the murder algo. You know, we're extended here, so they might spike it on murder algo under 74 and then come back. I don't think they're going to hold this. I mean, it kind of has the posture that they could hold it, like a dump into the close under 74, but not really ideal. VWAP doesn't tell you anything. The last time we hit VWAP on that 374 run, all it told you is if you're short, you probably want to take off some profits. That's all it told you. And if you're looking to be long, possibly buying VWAP or around VWAP. So we're below VWAP now. So clearly it's bearish. Duh. We're also below all the MAs on the 5 minute, aside from the 200. So, the MAs told you that a long time ago, well before VWAP with that 9 cross. Oh, no wonder I didn't hear my bells. I unplugged my headphones and it reset the volume. Or no, that's actually YouTube volume. I don't think I heard my bells. What the hell? I was making my food earlier. I didn't hear any bells, and I come back, and they're under 375. The 5 minute stoke posture is a little shaky. So either they spike on the next 5 minute and come back, or they're going to come back on the last 5 minute. Now it's looking a little better. Right now, if we hold this posture on this stoke, it's looking a lot better. All right, baby, let's go. There's that bell. Let's go. Are they giving us the 1 minute? All right, they're giving us the 1 minute here. All right, this looks good. This is looking really good on the 1 minute. Looking really good here. 74 is cracking. 73.50. It's a coin toss if they're going to go that far. But the 1 minute supporting the 74 crack along with the 5 minute. If they could close 50 or better on this 5 minute, that's going to be very good for the 73.50 shot. $74.17. I mean, that's not that much further, but I don't know if they could do it by the bell. Maybe after the bell. I don't know. We're pretty extended on the 1 minute. That even if we hit 73.50, probably on a spike. But Murder Algo will be interesting here. This will be interesting. Don't get greedy though, because we are extended on this 1 minute here. that it's unlikely to hold. If the 9 was under 74.50, it'd be a lot better, but we're pretty extended right now. Yeah, the 1 minute MACD isn't supportive of a move past 73.50 if we even get there. And now they could play games with the 74 break. We'll see how it plays out here, but alright, that's not good. The 1 minute Stoke isn't bad, so it might take until the last 5 minutes. I hope we hit that too. If we do hit it, it won't be till after the bell, if they have follow through after the bell. That's my guess based on this 1 minute. But yeah, I hope you're right. They need to take back 74.50 on the next 1 minute. All right, looking good, looking good. They got to hold it. That's not good. Man, that's going to suck if they don't even break 74, and that's not looking good at all right there. Yeah, it's in jeopardy now. Definitely in jeopardy now. I don't think they're going to even break 74. That 1 minute is damaged. Oh, I was reading that wrong. I was reading that wrong. I was thinking 7317. My bad. I totally read that wrong. I thought you were calling 7317. Alright, it's hot as hell in here. I'm going to wrap it up as far as the microphone here. Because it's still hot as hell over here. 90 degrees. And ever since summer kicked in, man, my room's been cooking with all this CPU power running the stream. So I'm going to get off mic. I'll see you guys tomorrow, and then I'll on the stream shortly too.